Good evening, guys. How are we all doing? I hope we're all good. I hope we had a good Monday. So I thought let me just come and explain the setup which I was seeing on US30 and just explain one or two more things. So looking at the daily chart, we can say that you can see that price actually topped out here and we had a nice drop. We retraced back into the dynamic resistance. We dropped equal lows, retraced back again into the dynamic resistance. Then we dropped and we broke this low. But looking at the left, we've got this particular order block or demand zone. So I had just marked it as a point of interest, and this is the midpoint, right? So when the day started today in the morning, price was somewhere in there, and basically the bias for the day was a potential buy, right? So bearing that in mind, we just jump to H1 so that we can talk about today's setup. So remember also we trade New York session. So I'm going to talk about New York session, right? So price in the morning, London session, you can see we took out the Asian lows right here. Okay, we had these lows here. They were taken out at London session. These were the London lows. At 4:30, which is our trading time, that's where I'm going to highlight for you guys so that you can see where we had our entry. So let me quickly show you what our view was in the morning. Okay, so in the morning, I think someone shared their setup. They also shared a buy. And in the morning, my view also wasn't quite clear, but I had a point of interest of 42,200. This was at 10 in the morning. This was like at London Open. So I had my point of interest at 42,200 on H1. So let me quickly show you where that point of interest was. Okay, so on H1, you will see this high here where price actually, we had this nice impulsive push down. Let me just change this to black. Okay, we had this nice impulsive push down, then price retraced and continued to push down. But right on top of this price, we have a liquidity lying right there. We have liquidity lying around there. So that was my point of interest. So either I was going to look for sells if price had pushed at London session, I was going to look for sells, or I was going to look for trades going towards that point of interest if price had not reached that point at my trading time, which is New York session. So jumping down to a smaller time frame, maybe let's check M15. All right, so you can see this is where New York session opened, this low here, and we were playing around Friday's lows, right? We're on Friday's lows. So if we jump down to the 3-minute time frame, which is my entry time frame, you will notice that price was actually bouncing on the 200 EMA, and we also had equal lows in relation to the initial New York low. So this was the New York session low initially. Then price came, tapped it, then started to push up. Then at my trading time, which is 4:30 GMT plus 2, this is when the equities market open. You can see I had this nice W pattern here. Entry was at the close of the candle with a 1:3 risk to reward ratio. As you can see here, 1:3. So the target was around 42,164. So remember, we had a point of interest at 42,200 as well. All right, so price pushed up, retrace. So at the first retracement, remember, we always say 13 EMA is your best friend, right? So price came, rejected nicely on the 13 EMA. So you can enter here with a buy stop if you understand what price is doing. So again, we had another 1 to 3 setup, but here the TP for this particular entry was just the same with the original setup which we had. So 1 to 3 was somewhere here. I think this was 1 is to 3 point something, if I'm not mistaken, or maybe 1.3. Oh yeah, let's see, 1 point, okay, 3.67. Yeah, 1 is to 3.67 risk to reward ratio. So having 42,200 as a target, again, Price continued to push, gave us a third leg here with a nice W again. So again, you could still have entered here with your stop loss outside the range. Price would have retraced, but it would not have taken you out. And you could have still targeted 42,200. You can see this gray zone also. That's the one I had used to mark the setup. So again, if you were looking forward for a sell, so after price tapped into 42,200, what you're now looking for is a market structure shift, or anything in line with the sell. So from 4200, which was the high, you can see we took out these equal highs here. So we consider this a liquidity sweep, right? So from here, price dropped. No market structure shift was visible here, maybe unless you were on the 1 minute. Price pushed up again. Then we had this drop now. So after this drop, that's a break of structure here. All right. So I'll consider this a market structure shift. Then locate the imbalance, which was this gap here. Locate the order block, which was these two candles here. So if you're looking forward for a sell, if you had not caught the buy or if you had not participated into the buy, what I normally do is I prefer to take my trades below the 13 or on the 13. So I'll see my price reacting in my point of interest. Remember the imbalance and the order block together. So I would have considered a sell here with my stop loss maybe outside the range or just above here. So as long as it gives me at least 1:3 or 100 clean points, I would have taken this trade. So if you had put your stop loss here, you look to your left, what are you targeting? You need to target areas where you feel like there is liquidity. So this is the first point of interest. Second point of interest would have been this order block also, where price took off from when they created this high here intraday. So can just lower this to this order block there. That'll give you 1.2. Or maybe you could have targeted the 200 EMA. You could have also taken a 1:2. But if you're targeting 100 points now, 100 points from here to here, that's your 100 points. So this setup would still have been a success. So anything below 100 points, if you're selling, is always a bonus. So if you hit 100 points, you can scale out, move your stop loss to break even or inside profits so that you can protect your profits also. So again, if maybe you think, or if you assume price will continue pushing down, then you just have to look for any points of interest within this drop. So if you see like a zone, for example, so let's say we had this level here, we had this imbalance here. So price comes back, but you see now there's no reaction for a continuation. We get here, there's no reaction for a continuation. That means if you had not broken even here, then the trade would have come maybe right now, you would have almost, you'll be lost actually before your stop loss is hit. So all this price action, you just have to make sure that you understand what you're looking for or where your price is going for that particular session. Then you just trade accordingly. If you get into a trade, if you're trading indices, if you catch 100 points and if you don't take profit, just know that you're hustling backwards because 100 points is a lot of pips for you to just let go and watch go and hit your stop loss. So 100 points, scale out, move your stop loss to break even and wait. Either the trade will continue to play out if you had maybe mapped out 1 to 3, either price will get to 1 to 3 or it will just come back and take you out when you break even. But at least you would have secured the 100 points by scaling out. So I just thought, let me come explain for you guys because we also, I think guys, we're looking for a continuation here. But again, remember we had 4200. I even mentioned 42,240 as a potential TP. But again, 42,200 held the price. You can see major rejections here. And as long as you come back below the 13 EMA, if you are buying, just know this is where you cut your loss, right? If you are buying, if you come below the 13 EMA, stay below. That's where you cut your loss or just manage your trade accordingly. So I thought, let me come share with you guys. I hope this helps somebody, especially for those who were looking at US30. Potentially, the price can still continue pushing up if we look at it from from the M15. So let me just remove these. Go to M15. You can see 13 EMA. We've got a nice price action here. For that particular setup, 1 to 3 is very possible, but we're not participating in this trade. Price can potentially get to Friday's high, which is up here. But before we get there, remember, we also have the 800 EMA here, which is a dynamic resistance. We also have our 1 to 3 right here, which is a potential take profit. We also have this red line you see. I think this was Thursday's lows. Then we also have our 100-point mark from entry. If you're in this trade, price could actually, I think it would have hit 100 points already. So these are all ways you can use to manage your trade if you're actually in the trade. So let's say you want to take a buy, and we've got a setup here, possible continuation buy. What you simply do is you jump back again to the M3. Once you're on the M3, what are you looking for? On the M3, we are waiting for price to come and bounce on the 13 EMA. We need a reaction on the 13 EMA to show us that price is actually pushing up. That's number one. Number two, we need price to break this. Remember, we've got this order block here, which was respected initially, and this imbalance here. So we want to see price come above and stay above it for us to actually consider buys. Remember the 42,200. We still want also price to come above it, potentially retest, and then continue pushing up for that setup which we are seeing from M15H1 to be valid. So rather wait for one, price to react on the 13 EMA. Number two, price to break this zone and stay above it. Then number three, price to break the initial 42,200 area and stay above it. Once price does that, then the chances of it continuing to push up will be there. But if we don't break this level, then price can still potentially continue to push down in respect of the 42,200 area which we bounced on. So just to show you the trade as we took it, I jump to daily results. Okay, I'm not sure if this was a video I took. Let's just see.
Why did they fear father so much?
Okay, there we go. So you can see this was the W I was talking about. Our entry there. Price pushed with the first setup going to hit TP, second one as well, and these are the results. This is on a prop account. So that was the setup we took on US30 today. What else did I need to show? Oh, that's the results on the prop account. You can see this is a prop firm account with funded next, and these were the trades we took. So one other thing I wanted to share with you guys, I'm not sure if you guys will be interested since most people are still learning. I'm not sure if you guys will be interested in us going through Baby Pips, one of the best trading books. So if you're interested in us going through Baby Pips, you can see it's a good book to learn from if you want to learn trading. So these are the topics from your basics, types of charts, candlesticks, support and resistance, Fibonacci's, moving averages, Bollinger Bands. These are indicators. Forex pivot points, chart patterns. Then as you advance multiple time frames, Elliott wave theory, create your own trading system, market hours, know when to trade, money management, plan your trade, all these things. I don't know if you guys will be interested in us going through this book. This is Baby Pips. So I don't know. Let me know, guys, if you want us to go through this book and share the videos on our YouTube with chart examples like we did with Candlestick Trading Bible. Please do let me know so that we can actually make some time and go through the book. Apart from that, if you've watched until the end, please share your view if you want us to do the book or not. Let us know what you traded today. Did you take a trade? Did you make profits? Did you make a loss? Did you break even? Tell us your thought process through the trade. Let's grow the community. So thank you so much for watching this video. Enjoy the rest of your day. Good trading.